It's Tuesday, March 22nd, 2022. I want to start today's video out by thanking Matthew Marcellus for sending me this book right here. Fantastic book, World War III, The Dragon Rises. This book is a fictional perspective of the fall of America. Now, it's probably going to take me forever to read it, but so far, this is a fantastic book. So I want to thank Matthew for sending me this book. And I believe Matthew was homeless at one time in his life, and he's an incredible writer. And I believe you can find this book on Amazon. So check it out. I think a lot of you would really like it. World War III, The Dragon Rises. Fantastic, fantastic book so far. So check it out. And Matthew's not paying me a dime. It's a good book, and I think a lot of you would enjoy it. And I want to thank everybody out there for all the thoughts, the prayers, the letters, the donations, and other people have sent me books. I don't always have time to thank everybody, so I do apologize. I have an extremely busy schedule, so if I forgot to thank you, I do apologize, but I'm thanking all of you right now for all of the support, the help, and especially the prayers. And we will continue to take whatever free time we have to go out, continue to feed the pets, the homeless people, make sure we can give them some clothes and just some type of help. And all of that is possible because of all of you. So thank you, and God bless all of you. But without further ado, let's get into what's happening to the U.S. economy and what's happening around the world. A lot happening, ladies and gentlemen. Famed investor Carl Icahn says there very well could be a recession or even worse. What does that mean, worse? I think he is saying a depression, quite possibly, is around the corner. He says surging inflation is a major threat to the U.S. economy, and he is preparing. King World News, Fed trading room up to same old BS with stocks rallying and gold lower. Plus, look at everything that is skyrocketing. So today, Dow Jones up, markets across the board up, everything's up, crypto's up, everything's back to normal. But yet, we're hearing about World War III. And we are facing the possibility of real food and energy shortages. And the Fed continues to play the game that got us here. They're still buying mortgage-backed securities. They're still buying treasuries, ladies and gentlemen. And who knows what else they're buying on the stock market. U.S. dollar demand declines, borrowing costs rising. Small businesses are facing enormous trouble now with the labor shortage and rising energy costs. I think there was an interview, maybe it was a Wall Street Journal, a large publication, and I believe 72% of small businesses says they're in big trouble because they cannot get workers, and the cost of energy is really putting a hurt on their businesses. Also, King World News. This is great for gold, plus look at three things hitting all-time highs. This whole thing is great for gold, but everything is so manipulated right now. Again, markets across the board up, energy crisis, food crisis, labor crisis, debts, deficits, and all this uncertainty in Eastern Europe, yet markets are up today. How in the world is that even humanly possible? CRB Raw Materials Index, and CRB measures the price movements of sensitive base commodities whose markets are influenced by changes in economic conditions. So going back, CRB Raw Materials Index hits record high. CRB Food Index also at record high. All-time record German inflation now at 25.9%. Global debt at an all-time high. Markets up across the board today, ladies and gentlemen. Isn't that fascinating? It really is fascinating. And anybody who sits there and tells you that these markets aren't manipulated, that the Fed isn't in here with the plunge protection team, that they're not continuing to buy mortgage-backed securities, treasuries, and God knows what. These people live in the Wizard of Oz or someplace, maybe the North Pole, I don't know. But it is so clear what is taking place, and it's really, really scary. And this is why I continue to prepare the best that I can, because I see the game that they are playing. And this is what got us into all this trouble, right? All of the Fed keeping rates at zero, buying treasuries, buying bonds, buying into the stock market, printing enormous amounts of money, trillions and trillions of dollars. That's what got us here. And it's still continuing. And this whole thing is going to blow up. The hedge today. Oil price spike has yet to spark gasoline demand destruction. Gas is up 51% from a year ago. And I don't know about all of you, please comment down below, but I've I don't think I've ever seen so many people driving, at least not out here in Southern California. I've never seen so many people on the roads. Orange County, Riverside County, San Bernardino County, there's just people, literally like gas is free. People are out just driving around all day. But I guess if people aren't working, they're just out driving. Where they're getting the money from, I don't know exactly. Maybe it's credit cards, maybe it's those equity lines they pulled out of their homes, maybe they won the lottery. I don't know, but $4.32 a gallon is the national average. And gasoline consumption is up 6% from a year ago. And get this, it's up 8.6% last month compared to a year ago. So February, it was up 8.6% compared to last February. Consumers are pulling back on discretionary spending. Many retailers are reporting that things have slowed down. So maybe people are putting more in the tank, forced to put more money in the gas tank to get to their jobs or to get to the grocery store, and they're going to be out spending less at the malls, less on Amazon, less at Kohl's, less at Target, less at Marshall's. So we'll see what happens, but I think that this cannot go on much longer before we really begin to see real consequences here with these gas prices. People are adapting to it and dealing with it right now, but for how long? That is the question. CNBC today, mortgage rates are surging faster than expected, prompting economists to lower their home sales forecast. What a surprise. What a surprise not to see this coming. August rate on a 30-year fixed mortgage hit 4.72% today. This is going to continue to drag down the housing market. And I have no doubt that we're going to see rates blow past 5% this year. Economists are now lowering their home sales forecast for this year. Again, what a surprise, right? I mean, we all knew, 90+% of us all knew that rates were going up, and there's still people commenting down below that the Fed is not going to raise rates in May. Well, here's a newsflash. There's probably a 60% chance now that they're going to raise rates by 50 basis points in May. I guarantee you they are raising rates in May. It could be 25 basis points. I'd say 60% at this point, it's going to be 50 basis points. So it's the same people, I guess, that believe that I'm selling doom and gloom, but these are probably people who are real estate agents who have got to fool themselves and tell themselves that everything is okay. These are people that are probably very invested in the system, who must fool themselves and convince themselves that everything's going to be okay, that the Fed would never raise rates, that there is going to be no tightening. Look, it's going to happen. How long it happens is another question. But either way this goes, ladies and gentlemen, the economy is going to crumble, and it is beginning to crumble. And, I find it fascinating that some of these people continue to comment and ask me, when is the collapse going to take place? Or I've been talking about the collapse for 2 years. I don't know about you, but I've been watching this economy collapse for over 2 years. If this looks like a healthy economy to you, you believe in fairy tales. You believe in the Easter Bunny. If this is a healthy economy to you, I'm paying $6.39 for a gallon of gas out here. You look at record-breaking debt deficits. You look at 100+ million people not in the labor force. You look at the cost at the grocery store. You look at the bubbles in the stock market, housing, bonds. You look at global debt. If you do not see what is happening, and then you can look at the infrastructure in most major cities in America, you look at the pension crisis, you look at cities and municipalities and the amount of debt that they're carrying right now, you look at college tuition debt, all-time highs, you look at household debt, all-time highs, credit card debt, all-time highs, and yet these people don't see a collapse. They think this is good. They think this is normal. They think this is a healthy economy. Wow. I sure hate to see what a bad economy looks like, but yeah, we still have people commenting down below that this is normal, this is a good economy, this is doom and gloom, ignore all this. Well, you can ignore this, but you are the people that continue to watch on a daily basis, and I'm glad to have you here watching on a daily basis, because maybe sooner or later this will sink in. Maybe reality will actually sink in. Maybe you will stop denying the truth. The data is the data. Even though a lot of it's manipulated, I think things are much worse than they're even telling us. A lot of this data that I'm sharing with you is very conservative. I think it's much worse. I think the unemployment numbers are much higher. I think inflation's much higher. I think the debt is much higher. I think things are much worse than we're being told. But with the data that I'm going off of, it's pretty bad. It's pretty bad, and yet there's people out there that want to deny the facts and deny reality. And I hope that you continue to watch shows like this, and I hope at some point that you wake up. And we're going to see more red flags, ladies and gentlemen, but 99% of the people watching these videos understand exactly what's going on. You know how to connect the dots. You're reading right through this. Red flags, as some China property developers say, they can't release earnings on time. This is more trouble, ladies and gentlemen. Now remember, I believe it was Evergrande that stiffed foreign investors with $20 billion. And you have to ask yourself, is your money market, your 401k, your pension invested over there in one of these development companies like Evergrande, who stiffed foreign investors of $20 billion? It says a slew of Chinese real estate developers this week said they are either not able to release their financial results on time or have yet to set board meetings. Among them was Evergrande, one of the biggest real estate development companies in the world. As of Monday, 9 property development companies have yet to announce the dates of their board meetings, and more companies will be added to this list. How many banks, pensions, 401ks, retail investors are invested in these development companies over in Asia? And not a word today on any of the business channels. Nobody talks about it. Markets up. Markets completely ignoring this. We're talking billions upon billions upon billions of dollars. Companies, I believe BlackRock, Blackstone are invested in some of these companies. Your pension is probably invested in some of these development companies. Nobody even talks about it. Nobody talks about it. We are going to see severe consequences at some point here in America. With everything happening in Eastern Europe, these massive sanctions, the world now seeing how dangerous it might be holding US dollars, it is a matter of time before we begin to see blowback. Evergrande promises emergency debt restructuring proposal after lenders seize $2 billion in deposits. After months of stiffing foreign creditors, lenders have decided to take back what's owed by force. They took $2 billion from Evergrande's more financially stable property services subsidiary. Sources report that the suspected money had actually been seized by a Chinese bank. So very interesting now how this is all playing out. So if you're an investor in this, you're probably not going to see a dime because it was a large Chinese bank that seized it more than likely. But the moral of the story here is having cash, money in a bank is dangerous. Now, I think that it's very wrong for them not to pay their bondholders back, the investors back. But this is another example of how somebody can get to your money. If your money's sitting in a bank, it can be seized. It can be frozen. It can be taken. Even if you're Evergrande, your money can be seized, just like it was by a large Chinese bank. So be very cautious out there. We really need to be talking about this daily. And we're seeing stories every day about bank closures and branches closing and ATMs not working and people going in to try to get $1,000 out of their bank, and the bank will only give them $200, or the bank's closed. And now you have Evergrande here getting $2 billion seized by a large Chinese bank. So if somebody wanted to get into your bank account and seize your $2,000 or your $20,000 or your $200,000, it's very possible. It could happen. You have a judgment. You don't pay. You don't pay a bill. It goes to court, even though you're innocent. But the court finds you guilty, and they can seize your money. And of course, there are entities out there that, for whatever reason, if they think you're up to something, they will seize your account. In fact, they will shut down an entire bank. We saw that private vault in Beverly Hills that was under investigation. What did they do? They shut it down and seized everyone's accounts, everyone's safe deposit boxes at that vault, seized it. hard assets frozen, seized by a 3-digit entity here in the US. So just really think about if a bank is in serious trouble and needs to do a bail-in, they're taking your money. Your safety deposit box. If you've been inactive with an account or a safe deposit box, guess what? They can take it. And you're going to have to fight to get it back. So be cautious. Los Angeles becomes first in United States to reach $6 gas average, and people are driving around like it's free. Washington's trigger-happy sanctions may push countries away from the dollar, says think tank. This is on CNBC. Central banks are beginning to ask questions, and these are very serious questions, and you need to be asking the same questions. The U.S. has extended itself and has become very trigger-happy when it comes to the use of sanctions. Central banks are beginning to realize maybe it's not a good idea to put all your eggs in one basket. Maybe it's not a good idea to just be holding US dollars. And I think countries and central banks are beginning to look at options. And option number one is going to be the yuan. And you've got, of course, possible digital currencies backed by gold, fiat currencies backed by gold. But I do believe something big is going to come out of Asia. But we're reading more and more of this on a daily basis, and the world is getting nervous. They see, in my opinion, the abuse of this world reserve currency that has been abused for decades. And people no longer want to be enslaved by it. Countries don't want to be enslaved by it. They feel like this is a very, very powerful tool being used against them. And with everything we're watching now take place around the world, countries don't feel safe, and they don't want their accounts frozen. They don't want their accounts seized because they said something that we don't like, or they did something we don't like. So we're going to see more countries looking for other options. Don't put all your eggs in one basket. Don't be just sitting on cryptos. Don't just be sitting on gold. Don't just be sitting on dollars. Diversify, ladies and gentlemen, diversify. And don't put it all in one place. Don't put all your money in one bank account. If you're forced to put your money in a bank, put it in multiple banks. Me personally, I have money in vaults that I own privately in multiple locations. And that's how I do it personally. That's not for everybody. I keep just the minimum that I need in an account to pay the bills. Traders bet on an aggressive Fed and predict half-point rate hikes in May. I think this is going to be about 60% now. Fed is expected to reach 2.25% on the Fed's fund rate by the end of this year. What does that mean? That means that we're going to see big problems in housing. That means the cost for you to use that credit card going up, the cost to borrow money to buy a car going up, the cost to borrow money to buy a house going up, the cost to borrow money, period, going up. And we are going to see housing continue to slow. But I do believe something will trigger the housing market to where we're going to see a huge historic crash take place. But when you think about what's happening with this type of inflation, with people now reliant, for the most part, working in the service sector, millions making low wage or minimum wage, people at some point just are not going to be able to afford to keep their homes. They're not going to afford to buy a home. And at some point, prices are going to have to come down. And so many people are so far in over their heads with credit card debt, auto debt, student loan debt, a mortgage. I mean, this doesn't take a rocket scientist to figure out that this thing is heading down a dead-end road. And we're getting very, very close to the end of the road here, ladies and gentlemen. And people just don't have the opportunities. They don't have a safety net. They're paying so much in rent, a mortgage, and a car payment, and credit cards, and college tuition that they're running in the red every month. They cannot put a dime away. You know, typically every month you should be able to put some money away for a rainy day, have that safety net, have that emergency fund put away. And people can't do it. They don't have an emergency fund. This country is 70-80% living paycheck to paycheck, and half this country doesn't even have $400 or $500 saved up for an emergency, and most of this country doesn't have 3 months of savings for an emergency. This is very, very, very dangerous, because we're going to head into the worst economic time in our history, where people are the most unprepared in our history. And most people don't really even know how to do anything. They play video games all day. Many people are relying on pharmaceuticals. Half the country's obese. We've got adult men playing video games. We've got a drug epidemic. What do people, really? I mean, what are people going to do when the tough times get here? They have no idea how to do anything, literally. And that's not everybody. There are exceptions out there. Many of you, I know how to do things and have been preparing for years. But right now, and I want to remind everybody, this is a great time to remind everybody and to note this, that as we try to work on a skill to be a better asset, to have a skill set to know how to do something, hopefully in April, we're going to get back to the training facility and really work on security and really being your own asset, and just really going over a skill set back at the training facility, running and gunning. And so look for that at some point in April, and that will be on another platform. I'll keep you updated on that. We talk about security. You got to have security. You got to be able to protect your food, your water, your assets. But let's talk about how to set up a trauma kit. Let's talk about how to apply a trauma kit if say one of your family members, one of your children were bleeding, how to apply that tourniquet and use a trauma kit to quite possibly save their life or to get back into a fight. So we're going to talk about that. We'll get back to the facility. People really like that. We're going to put it on another platform, and I'll let everybody know when we do that. But it's so important to have skills, and especially knowing how to protect yourself and your family. It's not about just turning on a light bulb or turning on the lights on your front porch or having an alarm system or having your cell phone on you. That's fine and dandy, but if that gets breached and you're on your own, what are you going to do? I mean, yeah, your lights are on, great. Now that people know you're home, so maybe that's what they want. Maybe they want to come to your home because they know you're there. So we're going to talk about that, and we're going to talk about how to set up a trauma kit, how to apply a trauma kit, how to protect yourself and your family, and just go over some different options. So we'll look forward to doing that in April. The hedge. Goldman now sees Fed hiking 50 basis points in May and June, a first since 1994. So now here we go. May and June, 50 basis points. What are your thoughts? Comment down below. I know people out there are going to say that's impossible, never going to happen. But I don't know. Maybe Jerome Powell's going to prove us wrong. Maybe he's got something to prove now. Maybe he wants to be the next Volcker. I don't know. I don't think he has the guts to do it. But this is going to be a very, very interesting summer. I will say that. Next shoe to drop on office markets. State and local governments dump office space. wolfstreet.com. I'm going to close with this one right here, ladies and gentlemen. At the end of 2019, state and local governments leased 22.6 million square feet of privately owned corporate-grade office space in the U.S. Over time, governments could shrink their office space footprints in leased privately owned buildings by 25 to 30%. Average office space attendance in the top 10 cities is down 60%. What kind of effect is this going to have on the markets at some point? Who's holding the note on these massive buildings that have been sitting vacant for years? In my area, I've seen buildings sitting for 5 years. And this didn't all just start 6 months ago, a year ago, or 2 years ago. I've been watching this for years. I've been watching these office buildings and retailers just piling up. And we have millions upon millions upon millions upon millions upon millions of square footage of just office buildings across America sitting vacant that are going to continue to sit vacant. What happens when the bills don't get paid? What happens to the owner of these buildings? Private owners, you have banks, you have pensions invested in these commercial mortgage-backed securities that own these vacant buildings that nobody's paying on. So what happens at the end of the day when nobody's paying on these buildings and these buildings are just sitting there falling apart, need to be maintained, and they're just bleeding money? What happens? Who's gonna flip the bill for this? Who's gonna eat it? Nobody talks about it. Market's up today, although we have millions upon millions of square footage of vacant real estate just in office space, not including retail and restaurants and all that. Just office space. Top 10 cities in America, 60% vacant office space. I don't think that these buildings just appeared magically and that they were just free. Somebody borrowed money. Somebody's on the hook. These mortgages have to be paid back. And if money isn't going in on these leases, money's only going out. Somebody's losing. And is that your bank, pension, retail investor? We're going to be shocked one day, ladies and gentlemen, when this blows up and we find out how much debt and the shenanigans that have been taking place behind the scenes that nobody knew about. You remember back before the housing crisis when they were lending money, what was it, Countrywide? They were lending money when they knew 30% of the loans that they made, people were already defaulting on, yet they were making more loans. And these banks have got to realize what's going on. The banks holding the notes on these buildings understand, they realize that there's no money coming in, right? That these properties are dead. And why have we not seen any of the repercussions yet? We will eventually, and people are going to be shocked and awed, and they're going to go, why didn't anybody tell us? We didn't know. Take a look around, ladies and gentlemen. You see vacant buildings everywhere. Something is not right. You are witnessing a collapsing economy right before your very eyes, even though there'll be 3 people in the comments down below telling you and I that the economy's great, it's never been better, stop the doom and gloom, everything's fine. But all you have to do is drive down your street today, probably less than a couple miles, and you're going to see a vacant building. In my area, in my county, they're everywhere, everywhere. I've been to Orange County, San Bernardino County, Riverside County, San Diego County, LA County, you name it. And there are piles and piles and piles of vacant buildings, from office spaces to retailers to restaurants to medical centers. It's frightening. It's frightening. So it will be no surprise. Many are going to be in shock and awe when it happens. You and I, we're not going to be surprised. It's already happened. It's already over. But the general public just doesn't realize it yet. The general investor, the person with a pension and or 401k, they don't realize it because they're just happy right now that the stock market's coming back and their 401k is going back up and everything's going to be fine. They don't understand it. They're blind. They're simply blind to what is happening out there. All you have to do is jump in your car, look out your window, and you can see exactly what a crashing economy looks like. I'm going to leave it there today. Prepare, ladies and gentlemen. This is no joke, and it's no game, especially if you have kids. Make sure you continue to prepare with your security, with food, water, barterable items, some gold, some silver, what have you. We are going to really, I think, see things begin to escalate here very, very soon. You never know what you're going to wake up to tomorrow morning. Who knows what can happen in Asia tonight or what can happen in Europe and what you're going to wake up to. A bank blows up, a building blows up, a bomb goes off. Something could happen right here in America. We think nothing can happen here. Why do we think like that? We think nothing can happen here. Again, pure ignorance. A lot of ignorant people out there. And I think you have to be very, very ignorant to think that America is just going to skip away and hop away from this without feeling any pain and without really being affected by what's going to happen to the global economy and what is happening right now. It's happening right before our very eyes. God bless. Stay safe out there, ladies and gentlemen. I look very, very forward to talking with all of you very, very soon.